Dear trader, welcome back to my YouTube channel. In case you're coming to my channel for the first time, this is Trade with Dave, and my name is Dave Forex. So if you want to smash the subscribe button, drop a like, and don't forget to click on the notification bell so you don't start the time when I drop some content like this. So in the segment of this video, we're going to be discussing a very important topic, which is trading the DAX strategy. Alright, so in this video, I'll be explaining how to trade using the DAX strategy, how you use ticket entry, stop loss parameter, its target, and everything in details. So you want to stay to the end of this video because you don't want to miss a single bit of the stuff I'm going to be breaking down. So you want to smash the subscribe button, alright, and share the video, alright, so it gets to more people. Also, don't forget to drop a like. It's going to help the video do very well, alright. So what I'm going to be discussing in this strategy is very simple. How you take his entry, how he takes his entry, Excel in his position, and how he also manage his trade. So without wasting any of the time, let's go into the video. Welcome to the chart. So what we're going to be talking about today is this is DAX trading strategy. So his name is actually this is DAX, and we're going to be talking about his trading strategy. So what he actually trade is a very simple pattern, but it never talks about it. So you guys are not going to even to know that this is strategy is trading. All right. So, but when I was learning, I noticed when I was, I was in this group then, and I noticed the way he do the setups. I was just, backtesting everything, and I noticed that actually trading the Hago strategy. All right. So it's trading the Hago strategy. I'm going to type that here. Trading under this Hago strategy is just trading a normal price action, but price action, one of chart pattern in price action, that was what they used, but combining it with the Hago strategy. All right, and now this price action strategy, he actually trade is just what it is called, what the head and shoulder pattern. So you can see, so what's trading this strategy using the Hago strategy, trading the head and shoulder pattern. And now this head and shoulder pattern is now given a name, or the different name, which is now called what the cost mode pattern. But you can never hear him talking about in line. So this is strictly what he trade using the algo strategy, head and shoulder pattern, and that head and shoulder pattern is now given a name, cost mode strategy. Now this cost mode strategy, I've dropped a video before, I've explained this cost strategy, but now I'm going to be breaking it down, how that's traded. I'm actually going to be using two different pairs to explain this strategy in details. So let me just make this thing small, okay, so you can have space to do others. All right, so now this is how the strategy looks like let's say price is in an uptrend, making higher highs, higher lows, higher highs, higher lows, higher highs, then make higher highs, then price failed, came down like this. All right, so we're expecting to make a higher high, but instead of what, price didn't make an higher high, only started ranging around this area, then a drawback to this point or even below sometimes, then it started doing something like this again. Now at the point it is here, what DAX used to do is, this was the last high created, right, and this was the previous high before this high. Now we are expected, when we come for a low, we expected to go for a higher high, but that didn't happen. Then price took out this low. All right, this was the last low. Now this is where it combining with, you see a little bit of smart money concept in the strategy, right? So here, since price has broken the low, it means now this thing is telling us that a change in trend. Price is no more in an uptrend. We are now seeing something like a bearish move. So what it's going to do is it's going to map out this area, this point here is going to mark it out like this. Then it's going to put a dotted line like so here. So I don't have a dotted line, so I'm going to be using this my green horizontal bar to explain that, because I don't have a dotted line. So it's going to put another small line here like this. Now this my horizontal bar is another little line it put here. So then it's going to place a pending order here for itself at this point. Then it's going to put the stop loss on the wicks of this previous high here. All right, then it's going to target back to this low which was this low, it breaks here. So this is going to be his target. So let me use this black line for that. So here is going to be his target, and it's going to have a target like this. That's why you see in his trade most of the time you see a risk reward of 1 to 2, even 1 to 3. So if price, let's say this thing dropped a little bit further, that would be his target, which is going to give him a risk reward of 1 to 3. So you can see that on my chart. All right, so this is going to be his target. So depending on how it drops, so that's why you always see in his trade, you go and check in history, you see 1 to 2, 1 to 3, never goes more than that. All right, so that's how his target is always being target. And what we wait for is we just wait for price to trade back to this area, doing this thing, then immediately it taps in, it's with a pending order, then price drop off to his TP. So now you have to remember that not all time is not all time is going to work. It doesn't have 100% strategy win rate. So not no trader that has 100% strategy win rate, at least we see 70, 80, 90. All right, so this is how it trades. So, and this pattern is called what? This pattern is called this coast mode trading pattern. That was how we arrived at this coast mode trading pattern. So, but you can never hear him talking about the coast mode pattern. He will not even tell you he's trading the algo strategy. All you do here is locking 1.0, locking 2.0. So that's how it's done. All right, so this is just strictly what DAX trade. You can check in this trading chart. So I'm going to put these things like this, so everything align. All right, so I'm going to put this thing like this. I want everything to be under his name. All right, and this one, so I'm going to delete this head and shoulder. So I'm just going to put the algo here direct. Then I'm going to take this one here, and this one's going to be here. So this is literally what DAX trade. All right, so now what we're going to do is we are going to go straight to his we're going to go straight to a live chart, and I'll show you some example. All right, if this is a bullish move, this is the way, and if it is a bearish move, just flip this thing upside. All right, so let me explain the bearish move so that you don't get confused of it. So you just like this, price was now what, in a downtrend. You're going to see a downtrend narrow in this kind of situation. The price was in a downtrend like this, then created the last low here, then price came back here, created a new low. You're expecting it to create a new lower low, but that didn't happen. But price stocks around this region, then started dropping, then take off this previous low, then started trading again as if it's coming back again, then came all the way what, as it's coming all the way to this point. So what DAX usually do is what, we just put a straight line here. This was the last low. We're going to put a straight line here like this. Then it's going to put another dotted line here. All right, so this is what I'm explaining. It's going to put another dotted line here. Then it's going to put a buy pending order here. All right, its target is going to be to this previous low that was taken off. All right, so that was the previous low is going to target. Then stop loss is going to be around this region. Sometimes a risk reward of 1 to 2 or to 3. All right, you always see setup like this. Let's say it's going for a risk reward of 1 to. So on the first one I explained with 3, so let's explain with 2. That's why you always see setups risk reward of 1 to 2, 1 to 3. There are always no more than that. Then it's going to wait for price to start trading. So it's going to wait for price to buy into his zone like this, to sell into his zone. This is the zone. So sometimes price might even come here, feel like if it's coming to a stop loss, but sometimes it will not get there, it will now come like this and start trading, then it is PP. All right. So this is strictly what is trade. Now this USDJPY in front of me, and this 15 minutes time frame. If you check most of that strategy, you do trade. So not regardless of the time frame, all you want to do is you just make sure you want to identify that pattern. So most of the time, but when I check the setup, it's like mostly on 4 hours or 1 hour. 1 hour presently, so you can see this is the 1 hour chart. So we're going to be looking for that pattern, and I'm going to be using that pattern to explain. All right. So now look at this area here. Look at this point here. This is exactly what I'm explaining. So look at, so price was coming from here. We are going to use this present chart. All right, so price was coming from here. You can see that this price is an uptrend. Then get here. All right, so it's create a new low. So we're expecting it to come and create a new high, but there it started consolidating. Then you can see that this red candle started dropping off. Then it took out this low. So let me mark out the low. So you can see the low right here. So sorry, trading view is trading view does this kind of thing sometimes just misbehaving. So you can see this is the last low here. It was taken out. You can see that the low was cleared. Then it's going to what? Put a dotted line straight up here. All right. Then it's going to also have another straight line around this last high here. All right. Then it's going to place a pending order here for price to come and tap him in. Then stop loss is going to be just to this week's here. Then his target is going to be to this previous low that was taken out. So which you see that this is a risk reward of 1:2. So let me just show you guys. So you can see very well this is a risk reward of 1:2. So you can see it. So you can see 2.24. So which is this low was taken out. So where price gets, that was the target, and you can see the price just there then tapping me in profit. And sometimes if you want to go for a further extension, if you check your setups, so that's where maybe you see some consolidation here or something, they might even target here. But most of his trade never pass a risk reward of 1:3. So you can see, so this is what you're just going to target. You're going to see this place like this. All right, so and you can see how the trade plays out. So this is a live chart example. All right, so let's look for another example on this pair. So on the bigger view, all right, so I'm going to be using 4 hour time frame to explain again for a bigger view 4 hour time frame. Okay, good. So now guys, this is the 4 hour chart. I'm also going to be using this to explain to you. Now look at this same pattern. I'm going to explain it. Still a bearish setup, see a bearish barrage now. So look at this. This was price in an uptrend. If you calculate for me, you can see that price creating lower high, higher high, lower high, higher high, lower high, higher high, lower high. Then failed, then came here, created a new higher high, lower high, higher high. Then at this point, I actually have now this my home zone. This is not part of the strategy. So at this point, it came here, then price started what? Dropped, taking out this last low. You see that this was the last low. So let me zoom out. This is what I'm explaining on the strategy. This was the last low here. And that last low was what? Taken out. So you can see. So there's a way to label it. I don't label. All right. So the last low was taken out. Then you can see that price gets here, then drop, take out this last low, which means there's a change in trend. All right. Now it's going to mark out this one here. Going to put a straight line there. Then it's going to also mark out this one here. Like I said, told you guys, it's going to mark out this one here. All right, so let me use that green line so that we can just see. So we're going to mark out that area. So what it's going to do is it's going to place a pending order. So this is what I'm saying. It's going to place a pending order for sale at the weeks of this place here. So it's going to place it anywhere price comes to tap it in. So no matter how many days it takes, it's going to place a week. Then it's going to put stop loss just to this high here. Then it's going to target all the way to this previous high that was taken out. So you can see this was the previous low that was taken out. So it's going to target, this is the low, and this was where this one gets to. So it's going to target to the bottom of this one. So this is how I trade it. Reward ratio is 1.14, so it's not up to 2. So in the situation of when like this, that's where it seems that you will be targeting below that area, which just to get a risk reward of 1 to 2. All right. So you might see him targeting all the way to this point, which you give him a risk reward of 1 to 2.5 or 1 to 2. So let's say it's targeting to this point. So I'm just explaining. So you can see price was playing out, going in a profit, going in his profit, then
again. So presently, as we're speaking, is going to be on this kind of a trade, and now is up with each word of 1 to 1. All right. So go and check. This is what this Cosmos strategy. So now the information of this Cosmos strategy is, while I call it a head and shoulder pattern, let me explain. This is a head. This is the left shoulder. This is the head, and this is the right shoulder. and here is the neckline. So most of where it targets the time is the neckline.
Here is the neckline.
Alright, so that's where it targets always is at the time, most of the time. So where it targets is the neckline. So what they just do is once price created something, they see the head. So what they're going to do is it's going to put a pending order.
What they're going to do is it's going to put a
So they're going to put a pending order at the left shoulder straight to the front. Anytime price come there to form the right shoulder, then it's going to tap them in, they start going. And you can see that's exactly what is playing out here. So that's just how the Cosmos strategy pattern is being explained. It's also the same thing as the head and shoulder pattern. It's just a name that is given to you that is confusing you guys. So there's nothing different from it being a price action. All right, so let me go to Euro JPY. So let's have some other example. Let's see. I think I saw something like that on Euro JPY. I'm not sure. This is actually a trade I'm on, but this is not the pattern on Euro JPY. That should be card JPY. Yeah, sorry, pardon me. So yeah, good, card JPY. So you can see this the pattern here. But now let me explain. No matter the pattern you are using to trade, they still all say the same thing. It's just the way you read it and how you understand it. All right, let's have it here. So you can see this is card JPY. And this is what I was explaining. Look at this. Look at this. Price was in an uptrend, so you can see a high, a low, high, low, high, low, and high. Then the expected price to pull back to the this region, created a high, but instead it take out this low, which is what now look at, which is telling us that price is about to go. So that's why you now see. So it's going to mark out this area as the highest high, then mark out this point for a place where he's willing to take his entry, which is going to be this point here. I think the network is really fucking up. All right, so to this point here, so you can see this is going to be stop loss, and it's going to place a pending order here for a sell. All right, anywhere price comes to tap it in, and stop loss is going to be somewhere here. So you can see that sometimes you see stop loss big, sometimes you see the stop loss small. That's depending on how the setups come. So you can see here the stop loss is small, just as 30 pips. Then it's going to go for a risk reward of, this was the last low it takes out. You can see this is the last low price took out. So it's going to go to that low, which is going to give him a risk reward of, which is going to give him a risk reward of 1 to 4.5 or thereabout. But you can see that what this strategy price never come there. It was like if it was coming there here, when it was coming here, didn't get there, drop off, then do like if it's coming up here, and that didn't happen, then price went all the way down. So this is a situation where the strategy failed. So that's, it didn't take the trade, it's never in the trade, talk less of losing the trade. So here the pending order doesn't work. So that's tell you that sometimes you might have a pure high somewhere waiting for price, then price might never come there. So we don't control the market. All right, so that's just example of where price, this pattern didn't work. All right, so now, but as price is going again, notice this, as price is going again, get to this point. All right, get to this point, doing something high, and came here, break this previous high, created a new high. So there you'll be waiting like, okay, what is happening? Is this price about shooting higher for a new high now? So since it has taken out the last lows, you can see this is the last low here, price took it out. All right, price took it out. Now it's going to have a strategy again. You will see him is going to mark out this area, this place here for a stop loss. So let me use the green line for the stop loss. So this place here for the stop loss, and this was the last low before this one. So it's going to mark out this place on a straight line. Sorry guys, so it's going to mark out this one on a straight line. All right, then it's going to place a pending order here for a long. So it's going to place a pending order anytime price come back here. So that's where its pending order is. All right, then the stop loss is just going to be on this green line. So this is the way we place the stop loss. All right, then it's going to be targeting to the previous low that was taken out. So you can see that this is the previous low that was taken out, and this was the new one created. So sometimes it targets to this place, sometimes it's low.
So far it
So that
has a
was just
risk reward
explained.
of
So it's going to be
1 to 4.6
targeting.
most of the trade
So
is
far it has a risk reward of 1 to 2, 1 to
as I
3.
said
Most of the
earlier,
trade
right?
is always risk reward of 1 to
So
3,
so
as I said
now
earlier. All
for
right.
this one to
So
be
it's going to be
this is where it
so
was target.
now.
Now see put another line here, which it means that's where it was is targeting. And what something interesting about this, you can see that yeah, price was manipulating, almost hitting the stop loss, then went in profit, came back again, almost hitting the stop loss, but didn't hit the stop loss. Market will want you, right? Then started going, then gets to this point. Yeah, on this trade, it's going for a risk reward of 1 to 4.6. You can see. So getting to this point, and here it gets here, then price came here again, then dropped off. At this point, we'll have taken the stop loss. But do you know that the stop loss will never be taken in this position? That's where you see him coming up the situation of if you are not greedy, you should have been out of this trade. All right, because and which is true. This is a risk reward of around 4.6. All right. Now price has printed, giving you a risk reward of 1 to 3. This point here, I can tell you price has given you a risk reward of 1 to 3 before it started reversing. So on a normal norms 1 to 3, your stop loss should be either above your entry, which make the trade a risk-free trade, or you should have locked in 1 to 1. You should have locked in 1 to 1. So if you have locked in 1 to 1 on this trade, even if it has come here, stick you out on 1 to ratio 1. That was when it came back for this first time. All right. So let's say the next stock is. So let's say when it was coming, you only break even. So let's say you break even, your stop loss was just here. Here it didn't tap you on the break even. Then it points up here again. If you understand price action, this is a clear double top. This is a clear double top happening on a support level. Now, most guys doesn't trade the support level. They just believe in all this algo and everything. Now, but the way me I trade, I combine all this strategy and I use it to work out my own strategy. So you can see using the algo, the cross model, that's how I know about all this trading pattern. I learned everything. So using all this pattern, can see that I could see that this was a clear support level. All right, it was a support in this previous place here, but here it's becoming a resistance. That's why price is always coming back to retest it, But which is telling you that that's a support level turn resistance. So you can see that then price came here, created a double top. Immediately I see all these red candles started forming, then I know there's an issue. Manually, I'm going to stay out of the trade. So I'm still going to get out of the trade on a risk reward of 1 to 1 minimum. Right? So at minimum, so it never comes to my stop loss. But notwithstanding, why price was here creating this double top here, I knew it, and I shared in my community. I told them expect USJPY sell, USD card sell, USD CHF sell, Euro USD buy, GBP USD buy. And that's why you see me buying gold. So a video that I dropped before the video, you see me talking about you selling USD card, you selling USCHF, buying USD, GBP USD, you buying Euro USD. That was how I come to this scenario. Because I know that this was it was really an uptrend, but the uptrend failed here, come down, break it, we tested it, then started going again, come back for the second time, we tested it. If I'm going again, come for the third time, we tested it. That's tell you that sellers wants to take control. It's just very simple. Price wants to do something, it gives the information, but it's just that we traders don't look at it from a perspective. We just want our home buyers, all right? Before market reverse, it actually give you that information. So and this is all done for the Cosmos trading strategy. I hope you enjoyed this video. And if you have stayed to this moment, you watched this video to this moment, it means you are willing to learn. And I congratulate you for that. But before I go, I'm going to give you a bonus. This is just a bonus, all right? So this is 4 hours time frame. Very nice. And this setup, I can tell you for a fact, is going for a short. You can pick your entry right from here, put your stop loss at this green bar here. This is my green bar, put your stop loss there. Then target all the way back to this my blue zone that is around, this the yellow zone that is around here. So let me just say one each word of 1 to 3 weeks. So this is how the setup is going to look like. You can take the trade, but make sure you manage the trade. So that's just it. I'm going to save the screenshot so you can see that. So this is just explaining the Cosmos trading strategy, and I also give you a signal at the end of the video. So that's why you want to subscribe to the channel. We've come to the end of the video, and if you find this video helpful, smash the subscribe button, drop a like, and don't forget to click on the notification bell so you don't stay addicted when I do also content like this. And you can also watch this video, this one where I explain this particular trading setup strategy. Also watch this video and also watch other videos in the channel, and let's keep this channel growing. All right. Thanks for staying to the end, and I'll catch you in the other subsequent video. Peace out.